Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, October 28th, 5:38 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. I will be returning to IBD Live this Friday morning, and the topic is going to be low risk entry point shotgun techniques. Basically, what this is after getting stopped, which happened quite a bit to anybody that's a growth investor, I would imagine, last week with the big underperformance in leaders culminating with a washout on Wednesday. After that, the markets started going back higher, and a lot of the leading stocks that you might have gotten shaken out of uh, started to come back to life along with the indexes. And if you find yourself under invested in the market when this happens, the question is, how do you get back in? And I'm going to talk about a technique, a low risk technique for doing that. So tune in to IBD Live if you're a subscriber to IBD Live. That starts at 9:20 Eastern, and we will also discuss the same topic on our podcast that will be released Friday afternoon. So let's get into it. State of the market. We are in an uptrend. Uh, and if you check the trend gauge in the upper right, we're back to the coveted four green arrows. Some underperformance today in value stocks and mid and small caps. Breadth was really not that good. Leaders went back to the green arrow yesterday after it's been a I'll say interesting to say the least last 7 days if you're a growth stock trader, as leaders last Monday, Tuesday, and Wednesday just had horrible days, culminating in a washout on Wednesday, as I mentioned before. But four straight day of strength in leading names and all-time highs, third straight all-time high for the S&P 500, led by big tech. That is not bearish when the big indexes are at all-time highs. People are going to point to breadth being weak today, and it absolutely was. But we don't focus on what's lagging. We look towards what's leading. And that's what happened today. Big tech leading, led by NVIDIA. NVIDIA had a big investor presentation, announced a bunch of partnerships, and upped the expectations for their revenue going forward. And the stock was up 5% today. Some of that trickled over to other names in the sector. And away we go. FOMC, widely expected, not widely, the most unanimous that I've ever seen. I've never seen 99.9% chance of a rate cut, but that's what the markets are pricing in tomorrow. Wednesday, 2 p.m., that announcement will come, followed by the press conference. And after hours, Wednesday and Thursday, we'll have multiple big tech earnings. So lots of things going on in the market. Here were the numbers. 21 over 21 list, 12 up, 9 down, up an average of 0.9%. The Turbo 12, more aggressive, down 1.42%, only 3 up while 9 were down. And that's pretty much stays in line with what we saw today as far as larger names outperforming smaller names. The Big Eight up an average of 1.25%. The RG8 down 0.7%. S&P 500 opened up by 1/3%, pulled back and was slightly negative, then rallied late morning, early afternoon, little pullback into the close, still up 0.23%, but look at the equal weight down 0.86%. Value stocks far underperforming growth names today. NASDAQ 100 up 0.77, but equal weight NASDAQ down 1/3%. More evidence about how it was big tech that carried the day today. Dow up 0.34%. Some high priced Dow stocks strong on the day. Mid caps down 0.86%, and the Russell 2000 small caps down 0.55%. Global 60/40 up 0.12%. our flagship GROTECTION portfolio of 0.41%, turbo down slightly, 0.06%. Let's get into some charts, and we'll start as we normally do with the S&P 500. And so here's last Wednesday. This is really doesn't even look like it was anything to be concerned about on the indexes. We talked about this Friday in detail on the podcast, and then bounce back on Thursday, gap up on Friday, another gap up on Monday after China news, another gap up this morning, and these gaps are sticking. We're getting extended. We're 4.5% extended from the 50-day moving average on the S&P 500 and 7% extended on the NASDAQ 100. That's a little bit of a tap the brakes number right there, but uh, more than the fact that we're extended would be the reaction to the earnings that come in after hours on Wednesday and Thursday with those big tech names. So S&P 500 would not be surprised to back and fill a little bit or go sideways. But again, that big tech reactions are going to carry much more weight than anything that I say will impact the market. Here's the equal weight S&P 500, and this is not a bad looking chart at all, unless you look at the relative strength line, and that is at a low going back to March. And that's why no chart is complete without a relative strength line. If I said it once, I'll say it 1,000 times. I'll say it every time we talk about charts. Here's the NASDAQ 100, three gaps up, very similar to what the S&P 500 looks like, and relative strength at a new high on the NASDAQ 100 as well. Let's look at the equal weight NASDAQ 100, lagging over the past week, but still a very strong chart there. Dow Jones Industrial Average, running into that 48,000 level and reversing, second straight gap up there as well, actually third straight, and that's an all-time high as well. 400 mid cap sitting on the 8 EMA, consolidating. Relative strength, however, continues to be not so good, and Russell 2000. Relative strength has been neutral, as you can see with the line that I just drew, going back to this big move up in August. Slight pullback today, down on the day, but still above the 8-day moving average. You simply can't complain if any instrument is above its uptrending 8-day exponential moving average. So those are the major indexes. Let's go to some inter-asset correlation, and we will start with the VIX. Spike up on the VIX, not unexpected with the FOMC announcement and presser. They're flying blind a little bit because with the government being closed, there hasn't been the plethora of data that Jay Powell will normally opine on, but there are plenty of other data points that I imagine he will quote. The biggest one that I'm sure he will get asked about is all these companies announcing layoffs because of AI increasing their productivity. So there's the VIX. Let's go to the US dollar. It continues to trade in a range, kind of a cup and handle looking formation here on the dollar, a cup and handle that you really don't want to see break out because a strong dollar is typically a headwind for stocks. It's also typically a headwind for precious metals, and gold continues to pull back after its almost panic buying at the top, breaking the 21-day moving average. GDX gold stocks also below the 21, right at the 50-day moving average there. They were, however, up on the day by 1.6%. And silver, same situation, almost a blow off run up there, pulling back below the 21, but still above the 50-day moving average. Bitcoin showed some strength yesterday, not today. However, outside negative reversal, down 1.2%, sitting on the 21 and 50-day moving averages. ETHA, Ethereum, is weaker. These are basically building flat bases for about 2 months now. We'll see how they resolve, but certainly no relative strength in crypto land, so you're not missing out on anything. Finally, bonds, the broad bond index BND traded tightly today. TLT stronger near the top of this recent range. And if prices are up, that means that yields are down. And there you can see the 30-year down near last week's lows. And that is a low going back to April on the yields. Good news as the government continues to have to refinance debt that's rolling over. There's the 10-year, kind of a similar look going back to April. That's our inter-asset correlation. Let's go to the tail of the tape. Stochastics, the indexes daily stochastic is positive on the six major indexes and also the RG8. NASI had a hook up. That's typically a tailwind for stocks. Dollar consolidating, yields dropping. Percent of stocks above the 5-day. We've got 36% on the S&P, 50% on the NASDAQ. That is by no means extended, despite the fact that we are extended from the indexes, and that extension from the indexes is due to the big cap tech names. The VIX popped today, up 4%, but with a 16 handle is just fine. News, I mentioned the FOMC 99.9% chance, and then Wednesday, Thursday, we got the big tech earnings. Keys coming into today, the keys have been the same, but until they change, we see no reason to not change the keys because that's what's dictating our exposure to the market. All-time highs for the S&P and the NASDAQ, not quite for the Russell, but they do stay above their 8 and 21-day moving averages. Day count from up 3, now up 4, arguably 5 if you include the bounce off the lows last Wednesday. 7 days up versus the 8 EMA, 8 days up on the 21-day moving average. Sectors, not that much strong today. I'll say it again, big tech led, that's XLK. Cyber stocks and nuclear stocks also strong. To the downside, a host of the spider sectors, energy, financials, industrials, staples, utilities, healthcare, and real estate. Jets also weak. That's airlines, and ITA, that's aerospace, weak as well. Portfolio changes. Continue to add back exposure. We bought SoFi and Palantir in GROTECTION. We'll take a look at those charts momentarily. And in Turbo, bought back UUUU, that's uranium. Also the uranium ETF, URA, APLD, and URTY. That's small caps, good low risk entry on small caps. And also added to Tesla. So GROTECTION 1.33, volatility adjusted beta 6.98% open heat. This is something we are very proud to present for our clients. No other advisor will tell you exactly what could happen to your portfolio to the downside, but basically we can tell you in GROTECTION, you will lose 7% before we will be completely out, and that will pretty much mean we're below the 200-day moving average and have been stopped out of all of our positions. Turbo 1.27, volatility adjusted beta 5.5% open heat. So bottom line on the day, big tech leads the NASDAQ and S&P 500 to all-time highs, while mid caps, small caps, and value stocks lagged. FOMC on deck, also big tech earnings on deck Wednesday and Thursday after hours. Let's get into some charts, and we will start with, we'll go with the 21 over 21 holdings. In other words, the stocks that we hold from our 21 over 21 leaders list in the GROTECTION portfolio. We'll start off with Robinhood. Very nice move up off the 50-day moving average last week during that shakeout, regaining the green line. That's the 21-day moving average and the 8 EMA, and then a very nice inside day today. Inside day means the high and the low were contained by the highs and the lows of the prior day. When you see it on light volume, it's a very attractive consolidation pattern, and you would expect that to resolve to the upside in a bullish market. Tesla continues to make higher highs after its big earnings shakeout last week. NVIDIA, very strong reaction to the presentation that they did today, up 5%, up another almost 2% after hours. We've held this for an extremely long period of time. We have like over 500% gains for some clients in taxable accounts where we hedge when it starts when it's under the 200-day moving average, but don't cash it in because it's a big leader. And why on a big stock that's it's easy to hedge, why have a taxable gain when you don't have to? But clearing that 200 level on very nice volume today, relative strength confirming the move. Next up, Halliburton oil stock had a very strong reaction to earnings, has consolidated for the last 3 days there. And Mongo. So the next four are the four that we started adding back to the portfolio after the shakeout last week. And Mongo is consolidating very nicely at the top of a flat base. Snowflake continuing to make new highs after breaking out of this ascending base. Palantir was added today, still within that pivot plus 5% after we got shaken out of this last week. And consolidating nicely. And SoFi had a big shakeout intraday. Let's look at a 5-minute chart here. So initially it gapped up and then sold off hard, but this hard only came down to the 8-day moving average that we pay a lot of attention to. And when it bounced off there and regained the 30 level, we took a position in GROTECTION, and that was up nicely. And that is all-time highs for SoFi. Look at this. Relative strength confirming the high as well. And those are the all the individual names that we own in GROTECTION. We'll take a look at a few more that were up nicely today. Here's CrowdStrike continuing its breakout from its cup and handle base. And let's go to Turbo now and see what outperformed here today. Bloom Energy, I want to mention because it is up 13% after hours and up 4.4% during the day today. Good news for energy names and great earnings and sales growth. They make money. They're profitable. Not much more you could ask for with that reaction to Bloom Energy. Let's also look at another after hours reaction, STX, the big four data storage companies, which is STX, Western Digital, Micron, and SanDisk. And this is up 4% after hours. These have been big leaders over the last couple of months, and looks like that might follow through tomorrow, also to the upside. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, hit the contact us on the website or email Dan. That's my partner, Dan Stewart. He handles all the compliance for onboarding new clients. That's dan@revereasset.com. And a reminder, our flagship portfolio, GROTECTION, gains approaching 70% if you've been involved in GROTECTION uh, since this most recent bull market kicked off, and that kicked off in November of 2023, right around here. And during this pullback, we lost 9.5% while the market pulled back over 20%. That's what we pride ourselves on doing at Revere, making more in uptrends, losing less during downtrends. Almost 70% gains, as I said, since November of 2023, when this most recent, it's actually closer to here, when this most recent bull market kicked off. Most transparent advisor you'll find. We detail exactly what we do and what we think every night on video. We've had astronomical growth over the last year as the word continues to get out there that you don't have to be a slave to the market. You can apply common sense rules to participate in market uptrends and protect yourself during downtrends. And we detail that, as I said, every night on video. And with that, I will wrap it for Tuesday, October 28th. This is Don Vandenbord, Chief Information Officer, Chief Information, going back to my IT days, Chief Investment Officer with Revere Asset Management. Telling it like it is. It's not how much you make in the market, it's how much you can keep. Thanks for listening and have a great day.